Good morning. This is the Eye of the Storm podcast with the Elliott Wave weekly update for the S&P 500 being recorded on Saturday, February the 28th at 7:37 a.m. Pacific Standard Time. I'm sure that everyone has woken up to the same news that I received this morning upon waking up, and that is that the United States and Israel have basically declared war on Iran and have started a campaign of war. And it is spreading pretty quickly as I read, and I find out that Iran has tossed missiles into several of the surrounding countries, the UAE, I believe, and probably into Syria, where there are American military bases. So Bahrain, I believe, so that whole area. And so it's could escalate, don't know. Again, I want to just also include that I have prepared the charts to kind of present what I'm going to present today, yesterday, after the close. And knowing that, we had the US-Iran thing going in the background, but no clue that this would be the result. So getting up this morning, I thought, wow, um, maybe I should have put them on last night, but it's going to make more sense today, I believe. So really what I'm presenting, I'm going to be going over the SPX, the cash market, the ES, the futures market, and the spiders. And they're all standing in agreement. Now they should because they're basically all based on the same index, which of course is the S&P 500. And the cash market, which I've always called Big Daddy, because it is a large index. It carries a, a large amount of options trading. There are a lot of things happen, and that's just where the larger players come in to set up positions. Could be strategic, could be directional, but this is where they come in, they trade. Now, also, what has come back into play and did actually contribute to uh, what I was seeing happen from the market, and that is, of course, the options trade and gamma levels. And so there are particular things that I've noticed here in the S&P, and then also followed through yesterday's expiration, which was just a Friday expiration, but also the end of February, the monthly February expiration, not the monthly that happened on the 20th, but just the end of the month. And so I saw what I thought, and I will review, was a lot of positioning but getting out of positions. So the moves that I saw the market do in order to monetize and to rearrange and just to change things around. And believe me, algorithms and these larger firms are big enough that they will push and they will do what they feel is necessary. So having all that in mind, here's basically how we ended up. The Dow ended up down 521. The SPX ended up, well, they took it away already, but it was down. The ES ended up down 44.75, and the NASDAQ down 128. The NDX also, I was only down 74. Not sure why they cleared the SPX. In any case, let's dive in. I am again going to start on my largest picture. And again, I want to make reference that no matter if there are many people that publish their Elliott Wave analysis. And so I have been using that the high that I believe we now have reached um, is cycle wave three. There are some that are stating that it is super cycle wave three, and there are even some that are saying it's grand super cycle wave three. I just want to make it clear on a time factor that's going to be the big difference. On what's coming next, I don't think no matter which degree you're calling it, me cycle or super cycle or grand super cycle, they're all pointing to the same box that I have in the color that I use for cycle degree right here. So where this correction over the next several years, in my view, is going to end up is down here in the box that formed primary wave 4. So again, since we're always going to be looking to the previous fourth wave of one lesser degree, I'm using cycle degree up here. So my one lesser is going to be wave 4, if primary degree, so excuse me. If we're up here on the super cycle level, then this is going to be cycle. Instead of primary degree, it'll be cycle degree. And so it'll be cycle wave 4. That's where the bottom should come in. That's where the market should head back towards. If it's a grand supercycle that they're declaring as finishing here as grand supercycle wave 3, then it's still going to be here and it's just going to be supercycle. So no matter which degree they're declaring as being completed right now, they're all pointing to the same box, to where this correction should come back. So I think it's fair to say, truly, folks, what I believe we're correcting is primary wave 5. So however you want to call it, but that's the last rally phase that's taken us up, and we're going to come back to that fourth wave. So we're basically and there's several ways that I think I can look at it. Maybe you look at it, it's the same way, that this right there, that the great financial collapse produced a lot of damage, not only just to the market, but also to corporate structure. We saw banks merge together. We saw banks go under. We saw merchant banks, Lehman Brothers, Bear Stearns, just close the doors overnight. No warning, just done and moving on. And so a lot of corporate America suffered pretty heavily. So what came out of this was the government stepping in and rescuing corporate America. So, and that came out through the TARP program. And so a lot of money was lent out. Interest rates uh, really were declining and had to all the way through this up until that point. And so we had cheap money and we bailed out America, bailed out the corporate, and that actually was successful, I have to say, because all of the TARP loans were repaid. So successful program. And then, but the next one up was the pandemic. And at this stage, the government, the federal government, had to bail out its citizens. We weren't allowed to leave the house. We weren't allowed to go out. We weren't allowed, if people were, they couldn't go out to work. And if their job was in the service industry or something where they couldn't work from home, they were unemployed. So the federal government had to come up with a plan on how we were going to rescue or support uh, the citizens. And so we had the stimulus payments. And so, but again, interest rates continued to decline. Cheap money was made available. Everyone needed it. So there were uh, loans given on a corporate level that were either going to be forgiven or paid back. There were so many different things that kind of took place, but it was how many of us survived. Now, but here's the underlying fact that even though the TARP was paid back, that great financial collapse created a lot of damage to 401ks, a lot of damage to retail investment. Now, what then came out of all of that was just tacking on trillions of dollars to the national debt, to where we now stand at $38 trillion. Possibly it's even higher. I've not got a more current view or total, but $38 trillion of debt. And this is what I've been talking about for quite some time. It is just going to take something that's going to shatter that very fragile holding together of the U.S. debt. Because, folks, we sell our debt via the bonds market, via 30-year bonds, 10-year notes, etc. Those auctions bring in money. And so, but it adds to the debt because we're lending, we're borrowing all of it. And so again, it is a very serious situation that I think is now occurring. And I think to not realize what could happen is going to come at your own detriment. Now, I realize that there's a lot of things that people just, we don't want to confront the possibilities of what actually could happen, what's going on. And sometimes, for whatever the reason is, folks, but I'm going to present it today. And I'm going to also discuss that if we're going to declare ourselves as traders, then we are going to have to trade. We will have no choice. We were going to have to make some more serious decisions about how and what we're going to be doing. Now, there's going to be all kinds of things discussed. The stability, the strength, all of those things. I'm going to be paying attention to what the market is actually doing. And we're going to have to, so a lot of the trading that you're going to do or may do, or what I'm going to do, is actually, for me, it's going to be extremely short term. Position trading is going to be a little bit more complex, but not impossible. Now, as long, we'll see how this all kind of unwinds. Let me start by that. But let's kind of go over this picture and then talk about what it may look like as we start to come down. I have also discussed that there are very strong signals of where the market should find its support coming down. So I'm going to start here on the monthly. Here's my count. I believe that we really are and have finished cycle wave 3 now. And part of my reason for doing that, and I will go into it more as we break it down, is that the market really has had extreme difficulty in maintaining and building more than 2 or 6 hours worth of a rally, or for that matter, a decline. But the declines have been hard. They've been hard, hitting hard. They've been cleaning things out. And so a lot of that has been surrounded and including all of our expirations. Well, I think now we're moving into that point where I think they're going to be prepared. So it's going to be very interesting for where we see how positions are lining up for the month of March. Now we have the news. And it should be, quote unquote, several weeks, this campaign or whatever they're going to call it, should take several weeks to unfold. And what the outcome is going to be, we don't know. And I'm not going to be saying, oh yeah, this is what they said. Because this is serious. This is real. And so let's go over this. I believe that we have finished cycle wave 3 and that we're going to begin a cycle fourth wave correction. I believe that fourth wave correction should ultimately take us back to the fourth wave of one lesser degree, and that's primary wave 4. And here's the box. If we're going to go towards the low of primary wave 4, then we are looking at the possibility that the market should come back to approximately on the SPX. It's actually lower than that. This is very difficult. Let me do this. And I can go right there. 667. I knew it, but I wanted to show it. So that's huge. And so let me kind of go back into this so I can start bringing this down. That's our monthly. I'm going to bring it down now to how we're counting again, primary wave 5, which is also done, is going to have 5 waves of intermediate degree, which is also done, but I need to get it down to where I can show you waves. There is intermediate wave 3, intermediate wave 4, and so this is intermediate wave 5, which consists of 5 waves of minor degree, of which 1, 2, 3, and 4 have been sitting there waiting. They're waiting for 5. We reached minor wave 4, that low, in April of 2025, April the 7th to be exact. And so from that point, we've been working on a minor fifth wave going up. And it really was pretty clear for minute 1, 2, 3, and 4 It was in this minute wave 5. It was within this last little push that the market really started to have trouble. We would get up there and fail, and then fail, and then fail. So my feeling is that the market, as much as it wants to, and it held on. And this is the other thing that we started to see. Well, we have earnings. Earnings are going to blow the doors off. Everybody's still making money, so we have to go up. And that was the thought. And then it really whittled all the way down to NVIDIA. Now, we got the Mag 7, and most of them came out with like, yeah, those are good earnings. Yeah, you guys are making some serious cash. But they took their markets up. The individual equity went up, and then it came down, and then it went lower, and then it continued to go lower. And we saw that in Apple. We saw that in AMD. We saw that in not so much in Amazon. We saw it in Google. Then Google reversed. We saw it in Meta. We saw it heavily in Microsoft. We've seen it in Tesla. And now we've seen it in NVIDIA. NVIDIA's earnings were not bad. I'm not sure what twisted and turned it because the earnings themselves, when they were reported, the stock surged to 203. So it's been higher, but it got to 203. That's the high post earnings. And then they immediately started to sell it. So before I think it was Globex actually started, they'd had the stock was back down towards 193, maybe even lower. Then the overnight they brought it back to like 198, 199, and then came Friday. Initially, they were holding it up. Then suddenly it's just started to fall and fall apart. Just seller after seller after seller. And that actually, now again, I want everybody to understand, I give gamma levels that are really for the S&P 500 as indexes and the spiders as an ETF. But each of the individual 500 stocks that trade options also have the same gamma levels as it pertains to the price of that underlying. So my thought here and my statement is that in NVIDIA, it just started to break through its own internal call walls, put walls, volatility triggers, large gamma positions. They took them out. Now, whether that was a product of the expiration on Friday, or was it to clean things up in preparation for the market going in the opposite direction, not up? So this is kind of what I started to get because there were a lot of rallies internally on Friday that I'm like, one of them particularly was Google. Now, all you need to do, folks, is if as an analyst or just as a trader, you go into these individual stocks and you go see where the open interest is. Is it sitting in the call or is it sitting in the put? And what's the strike price? Then it starts to become a little bit more relevant or obvious what they're heading for and what maybe somebody's trying to do. In Google, it was 310, and it was called input. So it became a battle. And you see where they closed it? They closed it at 311. So whoever was long those calls at 310, they were going to get the stock, right? And if they happened to be short the puts, they were going to get put the stock at 310. And I think that was part of whomever's plan. They needed to move large amounts of stock. And they did it via the options and the expiration. So that's what I'm talking about. When I see this stuff happen, it's like it has nothing to do with what they perceive as coming. It may, but at the time, it's like their position, they're getting ready, they're doing something, and now they're having the opportunity and an expiration cycle. So I saw that. We saw Apple suddenly just turn from being able to hold itself above 270 to 275. get dumped and finish at 264. Now, all those strikes, all those strikes become affected. So again, Amazon, well, we just have to look. Amazon obviously was 210. You can go and look at these. They've taken them down now, but you can go and see what traded. And so you can call it manipulation. You can call it whatever you'd like to call it. I think it's just options trading in its positions, and it's like rolling positions, getting out of positions, monetizing positions. It's all part of it. Now, let's try to put this in to what I see. Here we are, minor four, we're in minor five. I got to bring this down to the daily because this is where it starts to get interesting. Now, I still have a couple of points in there. As you can see, it got all the way up to that three. Let's just see if I can bring this down, open this up, bring it out this way, and open it up even more so that we can look inside. Okay. So don't need to go all the way up all the way, but I just want to show you. Here we had three, then the four. I continue. I continue. There's a chance that this gets taken down, but I'm feeling, this was my feeling yesterday. I had a growing feeling inside, as a trader, that something serious was going to happen. What I saw in the options trading, what I saw they were doing in the markets. Oh, let's talk about the SPX now. Let's talk about how they got it above 6,900 on Thursday. On Friday, we got it up to 68.82. They were heading for it, 6,900. They got close. But here, they monetized 6,900. They got it up there. They opened it up there and then watched it sink. So that was part one. Then here, they attempted to go back and try to get to 6,900 for whatever the reason, but the real goal was 6,850 to 6,800. So 6,800 survived. Now that's a major gamma level. How much of it expired yesterday, I don't know. We'll find out. So what I believe also that what's kind of going on is these failures was all in an attempt to square positions for the end of February to get out of what they needed to get out of by the close for the expiration, and then what they have moving forward into March and by the end of March into the next quarter. Right now, though, I just think we have to get into March. Now, we have the start of a military conflict, which has been hanging over the market. So what do I think? What do we all think? Do we think the market's going to rally, or do we think the market's going to fall? Now, I got a whole bunch of stuff going on here, but let's get down into this. If I leave this fourth wave here, and the reason I'm leaving this invalidation point is because I still have to leave this open as an alternate, believe it or not, as an alternate for wave one, which would then suggest that this is wave A of two, wave B of two. And now we're going to do wave C of two, which we can put out there. But look at this. I think what we have also kind of going on is a triangle pattern. Now, this would suggest that we go like here. Now, that would suggest that wave B or wave two. So if this is A, B, or is it 1, 2? Now, a wave two can't be a triangle pattern. Can't. They don't exist in a wave two. I've already seen where this came down and broke below what I've labeled as wave one. So in essence, I believe it's an ABC up and it's a wave two. Failing, but a wave two, even with a little bit of an irregular. Whatever the market was doing, it failed because it really should have broken above there, even even if the C wave was going to get above wave A. So I think it failed. And therefore, what does that suggest? This, and going. So if I'm going to leave this as 1, 2, now I'm going to break this down. And let me just see if I can get this put together here. Here's where we're looking, right? If this is going to be the B or it's going to be wave 2. Here we have wave 1, then we have this irregular, not by a lot, but still wave 2 should not take out the low, but it can in its B wave because we get the C wave taking it back up. What I find interesting is that it failed. And bing, it failed big. And we got it immediately. Now, this was in preparation. This started it. This, you saw them get out, and this is where they flipped. 6,900 came into play. And they dropped it all the way down to 68.60. So again, heading for 68.50, which they managed to do the next day because they rallied it back. Now, what can we say? I can say that this is 1 A, B, C, 2, minuet wave 2 of the initial first 5 down from the all-time high, which, by the way, was 7,002 in the SPX. So it got up there. Everybody thought, 7,000. Oh, yeah, did it. Not by much more. Okay, so that's there. Now, wave 2. 1, 2, 1, 2. What can happen? This. So I've left it here as a D with the possibility that it's going to be an E wave. But I tell you, if that's all you're going to get, can I say here, can I put this up to here to really, let's just see if I can activate this. I got to bring this way down. Well, let me just take it off and redo it. Remove it and go from here. And I'm going to add a drawing and I'm going to go right up into here, calling this the D. And I am going to mark it there and then get rid of that extra. Crap. All right, go over here, edit, and just take that off. So we got that part, right? And then you can do C to E, and let's just say we don't get much past that. You're going to see how steep this is. That actually would be it, folks. If, right? Am I breaking any rules? I don't think so. Wave E didn't even come close to where it should have, but that doesn't make any difference. We have global things going on right now. So, and to be honest with you, I don't know how the market's going to react. I don't see how the market can go like, well, business as usual. We're not going to pay any attention to this war that just was started by the United States and Israel. Like there's going to be no fallout. There was, yes, the leaders of the House and the Senate and all those people, they were notified prior to this. Like it was a great surprise, right? We've been moving battalions of battleships into the area. We've been moving troops into the area. You know, it was going to happen. Now, whether or not the Congress or the legislative branch is actually going to deny and say, we do not condone this attack. We do not condone this war. We do not give permission to go to war. And so it's going to be very interesting. So what I think I would expect that the market is likely going to gap lower. And I think a lot of it was they were preparing from the expiration, right? They took care of 6,900. I think they took care and bolstered up 6,800. If they were short those puts, I think they either they expired, and so all this gamma is going to change. Now, don't forget, those that do get the morning report below 6,800 SPX, I think it'll be filled in a little bit, but the next gamma level was 6,000. So what I think we saw the last couple of days, not necessarily a panic, but deep concern that the market has no underlying anything sitting underneath it to give it any type of support. There was nothing there. They were left, there was no downside protection to kick in. That's kind of weird, I thought. Now, we're going to find out what, if anything, got filled in. We're going to see. But here, if this is going to be a triangle pattern, then it has to be a B. If it's going to stay here as an ABC, then it can be wave 2, and this can be wave 1. It also can be an A wave. Now, it's also a little bit strange because you see we have A and then ABCB, and that's pretty large, but still acceptable. But it wouldn't, it does fit, or it does, you could, there are many people who say, oh no, this is an ABC. And I understand, but I'm not breaking any rules. I'm not breaking any rules here. And so the biggest one being wave 4 overlapping wave 1. I'm not breaking any rules. It all fits. It's maybe a little stretch here at the bottom, but I don't think so. And so I am going to label it wave 1. And I am going to label this wave 2. Now, the only thing that could break that is we somehow, and it has to happen in both the cash, which won't reopen until Monday, and the futures, which will reopen tomorrow at 6 p.m. Eastern. If we somehow, even in the futures market, manage to get ourselves up there to produce an E wave, then I'm still going to call this wave A. I'm still going to call this wave B, and we're coming down in a C wave. Now that lessens the blow in terms of what is it here? Because what we need from the market is the following. The market needs to kind of, let me do this, bring it down, and then open it up a little bit more. So what we have here, this is 4. We've been toying around. And again, if it truly is falling off because it's completed the whole sequence here, and it's just taken a long time to let us know, I mean, not a long time, but a month. This was January the 28th. This was February the 27th. Basically a month. But I think it's been unfolding to give us both sides still. Because of this, if I'm going to leave this, let's take all that down and leave this as minuet wave 1 of minute wave 5. Remember what I talked about? That this is the invalidation point for that count. Now, if it breaks it, and starts really sliding, we're going to have levels down below that it really should not go below. But unfortunately, where is wave one? Way down there on April the 9th. That's wave one. So it's crazy because I don't see that we're going to have a fourth wave taking us all the way back down to there. Just no. I wouldn't count it as a fourth wave. So again, my point here is I think if we break 65 20 22, 65 21, we start breaking there. I think, first of all, it's going to be extremely strong. It's going to be definitely one-sided. It's going to be just get out type stuff. So I think we'll get that clue. Um, we're going to be going through gamma levels. Again, we don't know what they're going to be. But if it stays blank between 6,800 and 6,000, I don't want to tell you what that tells me. That's just serious, serious, because the panic to get out will be extremely strong. And I don't know if it's going to be retail or I don't know if it's going to be institutional, but I think it could be something very serious. Now, we still have today and tomorrow to really get more information on responses, on you know, declaring that Khomeini is out and we're putting a new regime into place within Iran, uh, all kinds of things. So we don't have, the only thing we have is that they've started a war. And it could get, well, because Iran is sending missiles into other countries, it's, if they declare war against Iran, it becomes a world war. And basically, I believe Israel and the United States are declaring war. I don't know if they've made it. Now we're going to call this a war and we're going together to defeat you. Two countries declaring war on a third? Well, by the definition, it becomes a world war. And watch how quickly it can spread. So again, we have so much, and to believe I'm not trying to be a harbinger of bad news or whatever, or harp on this. I just want to be realistic. And then I think I would be stunned if the market rallied. I am preparing for the market to go down. Here is the invalidation point for this being a wave one, and it puts a lot more weight on exactly what I've done. Now, I get the same breakdown. I'm gonna go over to the ES and I'm gonna go over to the spiders. We got the same picture, weakness. We have the same picture that each one of those markets had to really scramble to get positions off and on yesterday. So let's move on here. So this is the daily. Now I want to come down. I'm going to put up my hourly once again, as we've already been, and there it is. So coming down, A, B, C, or actually it could be A, B, C, B, or I would actually label it wave two. I leave it up like this until we break below that line at 65.20. If we do that, which is quite a big drop from here, then I will permanently leave it as wave two, and we're in a third wave. But I'm going to give you that caution flag there because if it is a wave two, what do we have? 1, 2, 1, 2, and we're getting ready to fall in wave three. Longest, strongest. That's all I want to say. And if we truly don't have anything sitting underneath 6,800 to give us a target or support, it could go into free fall. And that can be kind of scary. Now, what I saw happening in preparation, if they got out of all the stuff they needed to at 6,900, at 6,850, if that's all been cleaned up, what's that leave? So again, interesting. I want to find out now. I don't have to wait till Monday morning to see what happens. But tomorrow we're going to get an idea of what the market's response to the war and post expiration what it's going to look like. So where would we start to have support for all of this? First thing I put in is I went to this one. Okay. So let me just open this up for us. All right. So here is intermediate wave 5. So the first thing you do, I'm going to go to minor wave 5. Where are we going to find support? Well, right there. That's our first line of support. Is at 65.22, right? If that they slam through, where's our next line? Well, see, that was all a rally. Where are we going to find support? Maybe light price support at these levels. But a break below 65 is serious because it was all rally. So really, it breaks us down to this two, which, oh, yeah, that's real. It's 51. And this low, which was 48. I think that could be stronger support. Get up, catch your breath, see what's going on, and go from there. That's kind of what I'm talking. But you know that what I'm thinking, if we're really in the beginning stages of cycle wave 4, this is a given. We should get down there. But I think that could be where we're going to have primary wave A. Maybe primary wave A can come in here and you get a B and a C. So two things that I've noticed. When we're dealing with should be a longer term move, either up or down, it seems that algorithms and quantitative trading and algorithmic trading have really speeded up the process. So we may think, okay, this is a cycle degree fourth wave. If cycle wave 3 took 77 years to get from that low to that high, then how long should it take us? When we just look at Fibonacci, we're basically looking at between 9 and 15 years to do this correction. If we look at the primary fourth wave, it took 9, almost 10 years. So it reached its peak in 2000 in the SPX. And then 2009 put in the low of the great financial collapse. So it was over 9 years on something that actually on the primary degree, primary wave 1, yeah, I mean, the number of years, it does work out. So should have been about 10 years as compared to how long it took to get up on wave 3, and wave 3 was correct. Wave 4 is correcting wave 3. So that all worked out. But now we're taking it up a notch, taking it up a degree. And again, if you're taking it up to a supercycle degree or a grand supercycle degree, that time frame expands. That time frame really, on that degree, folks, in my mind, that's recession. That's depression. We hit the skids and hit them hard. We have so many things that come up to this thing, and I'm not trying to be just talking about bad news or just talking about bad things, because I'm hoping that it's not going to happen. But I've talked about it, and that is the debt level, and how really, people, it's other countries that hold our debt because they bought it at a particular rate. So, when they decide they no longer want to hold US debt and they come in mass to sell it, the dollar's going to go through the floor and the bond market is going to go through the floor. And the yield on those bonds is going to go through the roof because we have $38 trillion to justify or to rectify or to do whatever. So keep in mind, we're starting a war. We don't know what's going to happen. We don't know what other countries, right? Who are the allies to Iran? Who can be dragged into this one? Because the US and Israel are going after Iran. But what if China says, we have agreements with them? What if Russia says, we have agreements with them? I don't know. I'm just saying if. We don't know what's going to happen. And let's think about this. The markets don't like uncertainty because you can't place a bet, right? Oh, I'm going to bet on this one because I'm certain that it's going to go in this direction. Well, we don't know. We don't know how long this will last. We don't know what the outcome will be. We don't know what the fallout will be. And that's adding uncertainty. You see how the market will react. Watch the precious metals. Watch the precious metals. Now, so here we are back to here, this invalidation point, but we're just looking at fourth waves. That's what I meant. I'm sorry to say that's our first, not a line in the sand. That's our first line of stronger support as we drop to this level. So again, if we get there and we slide through it because of gamma, because of whatever, it could put a tailspin and a really sell-off, a strong sell-off. Now, do I think that's going to happen on Monday? No, I don't. But I think, however long this takes. So one other thing I want to add when it comes to trading, I don't know how, maybe you guys noticed this, maybe you didn't. But on Friday and also on Thursday, there are pockets where I think like a vacuum exists. And what I mean by that is, let's just say we had a whole bunch of selling, sold, 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 sold. They were on a mission. Once the mission is completed and fulfilled, what happens? Well, they're done. And we don't have a stack of sell orders sitting in the market. And here comes some buyers because they've done something where they need to buy the underlying or they need to buy the index. And there's a gap. It just suddenly flips and it moves 10, 20, $15 in the SPX. Excuse me, 10, 15, $20 in the SPX. Quickly, and then resumes the downside. So I just call them these little pockets, these little vacuums where you got a whole horde of buyers or large buy orders coming in and hitting the market, forcing the hedging within the index, and boom, it just goes because the algorithms are going to cover, are going to hedge no matter what. Their mission is to buy it or their mission is to sell it. And if they can't find it, they're just going to go to that next bid or offer. And they're going to hit it, and you're going to be like, oh my God, look what they just did. Trust me. Now, what do we happen? We have four, and then we have the next four. We should find some support. I know these are numbers, I'm just tossing them out there. This is 5,100. This is 48.35. Now, I would think we could get there quickly. We're at 68.78. 68.75. That's where we are currently. This is 2,000 points away. 2,000 points away. 2,000 SPX points away. I don't have any idea how long it should take to get down there. I'm hoping enough where we got plenty of trading, we got plenty of stuff to do, we're going to all roll with the money, blah, 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 blah. Or is it just going to be like, oh my God, get me out? I do not know. I do have, and my gut tells me the market's not prepared. Retail, corporate, whomever, they're not prepared. I think some are, and they're going to walk away with a boatload. If you bought the puts and you got them cheap, you're going to be a big winner. Now, yeah, what I want to say is, folks, it really is going to come down. You cannot operate out of fear. You can't. You're going to have to battle it. You're going to have to step in. If you're going to step in, if you're going to attempt to trade this, if you need to trade this, my first thing is it's like, if you need to trade this, you just get out of whatever position is going to cause you the most grief. You just get out and then regroup and then redo and then keep trading. My point is, we have to keep trading, whether you're fearful or not. Send me an email, do whatever you need to do, but you're going to have to confront it and walk through it and trade because there's going to be an awful lot to do and it's going to be scary. If it's really going to unfold like we're talking here. So our major level. Now, could we get down to 6,500 on Monday? Maybe. Maybe. Let's see what happens over the weekend. Let's see how far whatever is going to happen here. I have no idea, folks. So it's just like it's weird. It's the uncertainty. All right. Now, what I wanted to do is I am just going to put phase one, which is here, intermediate wave four. On a cycle degree, intermediate wave four is going to be what I think could be the first stop for wave A. Now, here we are. If we're in a cycle wave four, we're going to have a primary degree ABC. So primary wave A may be underway right now, maybe in its infancy stage. So what's going to be inside of a primary wave A? My thought is because of the intensity and the strength or just the size of this correction, I believe that intermediate wave A will come in as 5 waves down. Okay, 5 waves down. And that suggests that 5 waves down to finish, primary wave A may come in right here. 3491. That's 3,000 points away. Now, and I'm not saying tomorrow. Please, I'm not saying tomorrow. Let's kind of put some, I'm going to have to go, let's go do that. Now I got to bring it all the way back down to my hourly. Not bad. Because you just activate. And I'm going to push this over to there. There. Wow, that wasn't bad. Now I'm going to go into here. I'm going to do this. I'm actually going to put this in that color because I think it is going to be an intermediate degree move. And so I just want to look at it that way. All right, so let's look 382, 5618, and 1.618. Yeah, that could be serious. All right, now I'm going to go back out to my monthly maximum, and I got to open this up again. This is such a pain. I got to get in touch with Thinkorswim so they tell me what's going on. All right, so here we have, look what we have. 618 is that minor 4, 4832, 618. There's your first marker. We have smaller markers at 56, 61, 52, 47, and then 48, 32. And then ultimately we have 34.91, which is 100%. So this is what I'm looking at. Those are safe markers, I think, for a downside move. We're attacking this first portion of it. Where can we go? And we're looking for, I would be looking for 5 waves down for wave A. Well, could this be wave three? Could this be wave three? We get a four and then we come down to a five and we get down to here, or we get close. Maybe we only get down to here and we're going to put intermediate wave one here. Or, excuse me, it would be, yeah, it could be. I wouldn't put in primary wave A here. I'm looking for five. And I think the five could get us to there. There's where I would put primary A. Then guess what, folks? See, the other thing, let's remember what Elliott really is. What comes after, five waves down? Three waves up, right? Then you get another five waves down, right? If we're looking for a larger five-wave structure to form primary wave A, well, then it's going to be a 5-3-5, or just a larger five. Primary wave A can come down in five waves. So in essence, yeah, we're going to have to play this very tight, and we'll see how it all starts to come out. I don't want to start to speculate now. We haven't even started. We may be in the very infancy. So that would be my marker. And then what do we have after that? Well, we have dropping in all of that rally. And that's where I'm thinking we go. So to come down to here, it has to be primary A. And then we have a primary B wave, and then we have primary C wave that brings us down to there in years. Now, again, like I said, what really strikes me is how quickly the market does the move. And I'm just really looking at what happened in gold and silver. I mean, it hit those highs and it turned, and it wasn't even a nosedive. It was a blood gushing punch to the nose, and it bled uncontrollably. That was algorithms, front and center algorithms getting out of a lot of positions and just doing a lot of stuff was happening in that time. But there's a chance in those precious metals. I've been looking for, like, they're still in this correction, right? They're still in, like in gold, an intermediate fourth wave correction. Maybe we have finished wave A, maybe we finished wave B, but now we're getting up high enough, and this war might just send gold back up above wherever it was. 54, 56, 5,600. That's 400. Well, from here, $300. Can it go $300? Sure. Sure. We saw it drop 700 in a day. So again, these are all going to be outstanding stuff. I don't know how to say it. I think we just have to trade. Somehow you're going to have to hold it in position. Because if we stop to think, oh my God, why are they selling? Is this really bearish? What? You're going to get buried. You got to put all of that aside, work out your levels, work out what you want to do, and get it done. And trade and trade, because there's a lot of money flying around. And why wouldn't we want it to get our little piece of that pie? Just saying. All right, SPX. So I got that coming all the way down to there. Here's our initial for this larger move. You can run the same thing here. And again, what you're running is just fibs. And again, I need to go back over to, let's go here to see where it shows up. Not bad. Did it twice. Pretty good. I'm going to activate this and bring this over to there. And I'm going to put this one in the minor degree color so we can coordinate here. 3825618111.618. That's pretty much how I'm going to keep it. And now I'm going to bring it back out, at least put it on the daily, and look what we have. Where do we have anything that warms up? Well, 382, we got a double at 56.61. So that's going to be a good marker. So what do we have first? 61.74. Wow, that's on the way to 6,000 if they don't fill in that gap, isn't it? So, but we have markers. I don't have anything that goes along with that other than it's a fib again for minor. From this is minor wave 4, so this is minor 5. This is the levels coming off. And then we have one below, which was the intermediate wave 4 up to the top of intermediate wave 5. So these are just our stages of unfolding. And still that invalidation point remains at 65.22. All right, let's go down and take a look at the ES. Because I want to do the spiders as well, folks. Um, there we go. So I'm just basically going to start on the daily because everything else is remaining the same. And the first thing I'm going to put up is this one because this is a little bit shorter term. So I'm not necessarily going to be adding all the super long ones. I just want to put this one in because this is going to be holding the highest importance. And I'm going to put that into that minor degree. And we're going to do this and like this. 3825618, 1.1.618. Okay, we'll go here. So again, these aren't bad. Check it out. These aren't bad. 65.53. That's just below 65.81. Maybe that'll be enough to an initial break. And then we rally and we come back. But here we have 62.50, 6,005. If we kind of come in and all we have is at 6,000, we're going to see how quickly they can get there. But there we have support, fib support based on wave 4 to wave 5, just minor wave 5. 50% retracement is 6,000, basically. And then we have 57.60, and then we have that bottom one. And there is wave 1. That's what I was talking about. Wave 1 actually topped at 56.55, 56.56, we'll call it. That's where wave 1 topped. So if wave 4 can't overlap wave 1, are you going to let it drop all the way down there and say, oh, it still could be wave 4? I will give you that this still could be part of this wave 4. Because even if it is, right, what are we looking at? Wave 4 can come down, and I've got a lot of lines up here, and I just don't want to put, but you could run it. This would be wave A, this would be wave B, and you got a C wave. So you can run it from there to there to there. And that is going to produce where you think it could come to. I'll just stick it up there, folks. You got to trade, you got to with me on this because, come on, there to there. And so what we have, right, we have the potential to drop to 63.50 and still be a fourth wave here. Okay. Here, no. I think that's too far. But here, yeah, it could. So this could be wave A, that could be wave B, and we're dropping down and to do wave C, and we put that minor wave 4 over here. Just saying. Now, that could be, and then we get a resolution to what's going on, et cetera, et cetera. So you see what I'm saying? Like, I'm declaring it all done because of the weakness in the market. That's going to be demonstrated. Either it's going to come through as this continuing fourth wave, which is bizarre, but it can. It can. And this would be A, and this has to be B, which means it can't be 5 waves. But I want to show you this is all part of it. A, B, C, B, C, B. It is possible. That's how bizarre the market has been. It's left open possibilities on an analysis basis, on a mathematical basis, that we could, let's see what this guy's saying. For oil and stocks, well, I think oil is going to go through the roof and stock markets react sharply. Yeah, we get it. That's basically saying what I already said. This is already up $2. I think it'll be up trading 70 or even higher. So Yeah. All right, let's go back to this. So that's an alternate. This ends up being A, this ends up being B, and we get down to at least 65, 53. We get through that invalidation point, which kind of gets rid of the one or gets rid of this, not necessarily get rid of that high, but it depends on how it comes down. But it could give us the alternate where wave four is still in place. This is got to be a very short war. Everything gets resolved. Everybody walks away happy camper. And then again, we see precious metals nosedive. We see oil nosedive. We see everything try to return to normal. And that four could come down. What do I say? 64, 63 was it? Get down to there. Everything turns back and we run in a minute fifth wave to new all-time highs. I know, unbelievable, but yes, it's still there. I would be remiss if I said, oh, no, 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 markets are going to crash. This is going to happen. That's going to happen. There's enough to force it. And it may be already in operation of occurring. But if they can stop it, if they can save it, and they put it off, the ultimate, they put it off until later this year or even next year, God forbid. But there's still so many things out there that could, first of all, if that war gets contained and resolved quickly, I could see a wave five. But there's enough other things to where people may say, we're done with the United States. We're done with whatever's going on over there. That's your problem. And we don't want anything to do with it. And they start getting out of anything US. They start breaking ties with the United States. Unbelievable, but can happen. All right, so I'm combining everything all into one. So technically, we do have the possibility where it could be minute wave four is still in action. And we're going to come down. We're going to break that invalidation point, which kind of takes that back out, puts this back into A, B, and we see if its C wave will hold. Now, I will continue to run that along with that 1, 2, and we're dropping in a third. So step by step, folks, step by step. That's what I'm saying. If we're going to trade, this is the time where we step up to the plate to defend your own positions, to defend your own money, to defend whatever it is that you're using or what you're trading on. Now, you can have an opinion, you can have everything else, but please, please make sure you've got points where either you're going to add, you're going to have a hedge. If you're considering that you're still going to carry a long position based on whatever you want to base it on, you better hedge that position. Please hedge that position. It'll be worth your while. If nothing happens, your hedge goes off, but you're not going to lose because you're going to be making money on the other side. But if the hedge kicks in, it gives you an opportunity to either get out of there without losing a ton of money. So please hedge. Now, if you're just in there trading, there's going to be numerous opportunities, but make sure that whatever you're doing, except if you're scalping or day trading in the future, you're going to make sure that you hedge because it's going to go fast and it's going to be ugly and it's going to be like, whoa. So if you don't have any positions and you just want to step in and trade, cautious all the way around. Do not be fearful. Have a plan. Have a thought about where you're going to get in, where you're going to get out, where you stop if it's invalid. Because you're going to want to use all of them. And you still could, yeah, I'm not going to go there. All right, so that's the ES. So this is potential, and that's for if we're going to come down, if this is all done, and we're going to come down in the first minor wave one, or even 5 waves of minor degree to put in intermediate wave one. So I think intermediate wave one could definitely get down to here. Intermediate wave one of primary wave A. I think it definitely can get down here. It'd be 5 waves. Boom, 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 boom. I think it could definitely, and it could do it quickly. If things start to crumble, it could do it very quickly. Okay, so lastly, I want to show you how the spiders agree all the way around. Again, I'm here on the daily. So first thing I want to put up is this guy. This actually I still have for the upside move. I didn't take that down yet. And this one as well. I didn't take that down yet, but I'm going to right now. And I'm going to take this one down right now. And we're going to put up a different one. And I'm going to put this, we're measuring downside, folks. I think that is correct. So here, we're going to edit this, and I'm going to put it into that minor degree. And we're going to go like that. And we're going to go like this. 3825618, 1 and 1.618. I'm just going to kind of leave it like this. 1.618 takes us way below there, so I won't look at it. But here we have, these are important. So we have 382 at 615.31. This is the spiders. We have 50% at 589, 590. 615, I think we have within gamma levels. 590, I think, is still within gamma levels. So how quickly can it get there? So let's go and kind of open this up a little bit. Crap. And I need to just bring this in, bring this up a little bit. Okay, so 3, 4. And then we have, so this is actually our invalidation line for a lot of things, but that's 650. 650. Woo. It's 35 points away. So here, if I'm labeling this as wave 1, A, B, it could be a C wave, could be done, but it's looking like it's a 3. So is it A, A of B, B of B, C of B? I don't know, but I think it could just kind of be 1, 2, and this is 1, 2, and we're dropping in a third if this is all done. And if that happens, then what is that going to look like? First of all, we have this one, that 2. So I go from here, and we're going to put in this guy. I'm going here to here. We got that at 660, 1.618. We got 100%, right? If this is 1 and this is 2, and we're looking for wave 3, and you're probably looking for 660 for wave 3 of minute degree. And 638 down there on the downside. How fast can that happen? Pretty fast. Pretty fast. Now, what happens if this fourth wave is still in play, right? So this is going to be A, this is going to be B, and then we're looking for a C wave. Well, we can go like this. I'm going to take this off for right now. So we'll have a lot of that. So a lot will depend on what tomorrow brings us. Here we have it, 650, 659. And if we're looking for that, that should really dip below there, that's 650. And we're looking at 618, 635. Wow. That could be a serious drop. It could a war plus other little infringing things do it? Yeah, could. We're at 685. That's where we closed, 686. How quickly would it take for this thing to drop 50 bucks? Initially, we have all of this in between. It's not the one I wanted. What color is that? That's going to be this color. It's the minute. It's the min. Yeah. And we're going to go like that. Put this in. Put this in. This is for that outside. All right. So we have. Actually, I can leave it all in. 382. No. 50. No. 618. I'll leave in. And that one I won't. And then we have those two. That would be just for the C wave, because we need it to come down below the A wave. So we need it below 650. So we have 618, 673, 674, 659. We have the two daily 200 period moving average, and then we have 1.6 at 635. So, and then underneath it, we have if it's more destructive and it's not this four, and we're just coming down in 1, 2, 1, 2, falling off the boat, and then this is a reality. Or I'm going to have a higher probability. Let's put it that way. But what I wanted to make clear, all of the markets have had the same problem. They're just unable to put in 5 waves. So we did here, but some people are going to say it's a stretch. I'm going to say no, not really. But I can't deny that others are going to really complain about it because I have one ABC2 that was a big irregular wave too, but I've shown this before and I'm sticking with it. 1, 2, and then this is a 3, and the 4 came up here, did not overlap. This is wild trading as well. And then here's wave 5. So it was strange. It was fast. It was furious down to that low back at the beginning of February. So, and I believe it was also, yeah, it was also tariffs. And then we had the big wave A, B, C, and I could put that 2 there. And then what is this? 1, 2, 3. Well, I could probably get this to wave 1. A, B, there could be a 2, 1, 2, 1, 2. It's a big 1, 2, 1, 2, 1, 2, all the way down. This was just expiration. If this fails, and you got to put the C wave here, and you got to put a wave 2 here, then this is all developing into a third, and it could just be pretty ugly. And we just kind of we head for the skids. We head lower again. Now, this is kind of what it's looking like. So even if I have to, I'd have to put a different one in. This is for that fourth, the C wave, I think. Yeah, that's for the C wave. If this is different, if this is still going to be minute 4, excuse me. Is it? No. I have to take this back. That would go there, and this has to be yes. This I think would be a minute 4. We'll see. But then it would be 4. We need that fulfills that coming into here 100%. But here, this is actually no for the minor. All right. I'll work this out, but this is just telling you what it does stand in agreement. It does show that it's a C. It does show that it could break and really fall strongly. Now, again, this we won't really know because they don't start trading or marking these until about an hour or two after Globex starts. So, but keep your eye on it if you're trading in the spiders. All right, I'm going to end it there because now this has really been long. I want to thank you for spending the time with me. I know I said a lot of things, and I'm just trying to present what I see and how I think it can affect our markets. None of it it's all not held, as we say, because there's so many things that can happen between now and tomorrow afternoon, evening when Globex opens, and between now and Monday's opening. So much can happen that can change everything. Understand that if it does, well, I'll be making those updates, first of all, Monday morning and then Monday afternoon. All right, that's it. The next update will be the morning update on Monday.